Hey guys, this is Andrew Keene from KeeneOnTheMarket.com. This is your S&P 500 daily recap for the day of March 29th, 2012. March 29th means tomorrow's March 30th. What is March 30th? End of the quarter. So tomorrow should be a very interesting day, especially on the final print. If we print above or below this 1400 level. Let's look at the daily chart. We're still in this bull channel right here. Big tail on the bottom today. We saw some tail yesterday. Huge tail today. We rallied about 12 points from the lows. Very, very, very stronger day. We did take out yesterday's low, and we took out the day before's low. I said if we broke that, we could test down to this 1384 level. So this 1384 level is very important for me. We didn't get that far low, but buying pressure came in. End of the quarter, I thought they were going to mark them up. Let's look at the 5-minute chart. So we opened up at 1392. I'm trying to see. Today, we actually did not get the higher low within the first hour. So 80% of the time, which means 20% is we don't. So if you took about it 5 days, 4 days, we'd get the low or high within the first hour. However, the other 20% we don't. And today we actually didn't. We got the low of the day at 1386 quarter. That was at 1055. So we opened, little selling pressure, a lot of overlapping bars, not much going on. Then we broke out at the end of the day, broke out above the cloud, actually bought the level here, and then we rallied up to this 1400 level again. So tomorrow, end of the quarter, will be very, very interesting for me. I just want to pull up one stock to see in RIM. I did an earnings play for RIM, and let me pull up the 24-hour session. Okay, so I had earnings, and I got a little bit of a dead cat. Well, maybe it's not out yet because I sold the 15-16 call spread, and I also sold the 12-11 put spread. So my break even on this is 1540 to 1160. Anywhere between 1160 and 1540, I'll make money. And I'm not sure if earnings are out, but it looks pretty good. If you guys want my live real trades, you have to be in the trading room. The trading room, I trade all day long in my real money with real dollars, no SIM account, and I'm on the mic for about 5 hours a day, talking to usual option activity, trades, earnings, everything you possibly imagine. If you would like a free demo, we could put you in there for a day or two. Email sales@KeeneOnTheMarket.com. I also trade futures. So oil, I did not take this trade, but this one would have been a huge winner. And I talk about the breakouts of the cloud. And let me put this back on the day with no Globex. So this morning, we opened up right here at 825. Then we saw a sell-off. So we sold off under the cloud. I was actually in here. I was looking to see if it ended up above the cloud. I was actually going to get long it. But the breakout below the cloud, I should have shorted the close right here. Short 104.61. I'm risking I do 10 cents above the cloud. So 105.30. So that's 70 cents. So my first scale, if I did two of them, my first one would be out at 70 cents lower, which is 103.80, which we would have been in there in about 20 minutes. So 103.80, and then I can figure out, I can either have the red as a trailing stop, so I would have been taken out of my last one at 103.25, or I could take a measure move target on the daily for oil. My measure move target would have been lower than this low. So this low was 103.78. So I would have, if I go back to there, I would have looked for something to break out under that, which was this 103.36. So I did not play this trade, but this is how the cloud works. It keeps you in the trade all day. Once we broke the cloud to the downside, we never got above the cloud. So this was a great trade. If I let it run, and I even used the blue line, which is an aggressive trailing stop, I probably would have stopped myself around here for a huge winner. So I would have sold 104.53s, and I would have bought it back about a point lower. And we look at this in the mini as well. I use a 5-minute chart in the minis, and once we didn't have any momentum through the cloud either way. Once we broke the cloud right here, we never got to the other side of the cloud. This keeps you on the right side of the trade. This isn't something I made up. I'm not sitting here drawing and scribbling lines down here. This is moving averages, time-weighted moving averages. I love using this. This is Andrew Keene from Keene on the Market. Have a great night, guys.